What's up everybody, it's Tropical Trades back at it again with another brand new video. In today's topic, we're going to be actually going over how to identify key levels on a stock and understand how charting a stock works for those that are wanting to learn how to day trade. So without further ado, let's jump right into the video. Alright, let's get right into it. So the stock that we're going to be charting today is the S&P 500. And the first thing you're going to need when it comes to charting these stocks out, and just so you can kind of follow along with what I'm doing, is going to be a trading platform, a brokerage. Now, what kind of brokerage should you choose? That's a great question. So there are many different ones that you can choose. The one that I'm using today is through Webull. Webull, the reason why I use it, I've used it over 4 years. I love the user interface. It's very easy. Now, what I trade on, I either trade on Robinhood if I want to do casual trades, but if I'm doing any type of aggressive day trading, I'm going to want to go with Thinkorswim through Charles Schwab, of course. But all you'll need is a trading platform, and to start day trading, it's very simple. You don't even need capital. You can simply start just by watching the market. You can simply start by charting out the stocks with me every morning during my live stream, or just doing it on your own time, watching educational videos like this, of course. And there's many different things you can do to get started, but the number one thing that you can do is actually taking action. A lot of people say, oh, I want to start trading, oh, I want to start doing this, but they don't actually take the action to put in the effort to learn how to do that thing so they can become successful at it. And if they do start it, they're never consistent enough to get to that next level to where they start seeing a benefit out of it. People like to see benefits quick. Benefits don't come quick without consistency and hard work. Okay, so I have Webull pulled up now, and we're going to be identifying the key levels of the S&P 500. Now, whenever you do have your trading platform pulled up, your brokerage, and you're looking at everything right now, you're probably like, what in the world is going on? I'm seeing candles, I'm seeing numbers, I'm seeing all these different things. Ethan, I'm confused. Take a deep breath. It's going to be okay. Now, candles. Let's break down what a candle is. Now, most of y'all, when y'all know of stocks, you probably just know of the line, the way that it just moves up and down, and then you just kind of know that in your head. Now, what a candlestick is price action in that specific time frame on how it moved, where it opened, where it closed, and how it moved in that time frame. Okay, so for example, we are in the 1 minute time frame. This candle right here, we're gonna look at the specific candle right here. I'm gonna break this down so you understand what a candle is. Okay, so this green candle, we're looking at the same thing. Great. So this green candle opened right here, right where my line is. It opened right here, and it closed right here, and that's why it's green, because it closed higher than where it opened. Now, you may be asking, Ethan, what do the wicks mean? Which are these things. Okay? The wicks mean whenever this candle opened right here, during this minute, it moved this far down and it moved this far up. This is where it opened. It went all the way down here. It went all the way up within that 1 minute time frame. Doesn't matter what order it went in, but it went this far down and this far up, and it ended up closing here. And this is the close of the candle. Okay? So that is a simple breakdown of a green candle. Now let's look at a red candle. This candle right here. This candle opened up here and closed here. How? Well, if the candle opened up here and it would have closed higher, it would have been green. But since it closed below where it opened, which is down here, that signifies a bearish candle, a red candle, of course. Now, the little tiny wicks are how much it moved during that minute. We're looking at a minute here, and that's just a simple breakdown of kind of how the candles work. So you have a better idea and understanding of how to identify these key levels. You obviously kind of need to know what a candle is, and that's a simple breakdown. I'm going to go more in depth in another video on exactly how to break down a candle, the certain patterns you want to look for, and the certain type of candle you want to look for to help you make a better and more logically thought out trade. Alright guys, I have my screen way bigger for y'all just so you can really watch what I'm doing and you can understand how to identify these key levels. So the stock that we're looking at is the S&P 500, my favorite stock. I love this stock more than anything. A lot of people, when they start to day trade, right, they will start to trade multiple different stocks at once. Okay? Multiple, 5 to 10, and they'll get confused. However, in my personal opinion, the best way you can do it is start with one stock or two. Two if you just absolutely want to. One or two stocks and learn them. Just like anything else in life. Learn their patterns, learn their movements, and learn how they work. That's going to allow you as the trader to be able to make better trades in the future because you're going to understand how the stock works. Okay? I prefer the S&P because it doesn't have very crazy volatile movements. It's very straightforward on it just kind of going up or it's going down. And whenever you learn how to pair that with trading off of key levels, support and resistance, which we're about to get into in just a second, you then can make very good trades. But it's all about just learning the stock, learning its movements, learning kind of how it works, and that's going to help you as the trader. Okay, so key levels. What are key levels? Key levels are where at certain price levels on a certain stock, it's where we've seen the stock either bounce or reject. Now, what does that mean? I'm going to explain this to you with a line. We're going to learn how to chart. So now we're going to go over support and resistance. So what is support and what is resistance? Support, let's start with that, is simply when a stock has hit a certain level multiple times, making it a key level because it is bounced off of a certain level, causing the stock to then go up after hitting that level, hitting a bullish movement off of that level. And whenever it hits that level, instead of it breaking below, it continues to bounce off that level and go up. Resistance is the opposite. It's whenever a stock has a bullish movement towards the upside, it hits a certain key level where the stock is hit multiple times, it hits a reject, and then it starts to go down in a bearish movement. Okay? That's the two differences. So when I'm looking at the S&P 500 here, I'm looking at a level to where these candlesticks, which we just went over, have hit this level multiple times. So whenever I do make a trade, or if I make a trade in the future, I know that if the stock hits this certain key level, I'm going to have a better understanding of what it's going to do, more than likely based off of past patterns of what the stock has done. Now, I want to say a quick disclaimer. I'm not a financial advisor, and obviously I cannot predict what the stock is going to do. However, if you do chart out the stocks and trade based off of the key levels, you're going to have better results than not doing that. Okay? So let's look here. What am I looking for? Okay. First thing I see when I'm looking at this. We're going to chart right here. I'm just going to be straightforward. Okay. Why did I do this? Why? Well, as you see, we were pushing up pretty strong here, and we broke through. We broke through. Right? Now, we didn't realize we broke through because that key level was never even there. But we broke through, we kept going up, and then, at 652, which is where our level is, we went all the way up to 660. And then we came back down to 652. Conveniently enough, we bounce off of that level perfectly, off of the bottom of the wick. You see that? Off of the bottom of the wick, we bounce off of this level at 652. Okay? And what do we do after that? We go up. We have a bullish movement towards the upside after hitting that level on the lowest wick on the 652 level. And then we push up. Push up all the way to 667. Right? Stock market's looking good. We're pushing up. Now we start to kind of go down. Okay? Now, whenever we get to this level, right, we didn't necessarily hit the 652 level, but we did get close. And then we decided to go up more. Now, watch this. How crazy is this? This is why I love trading, and I believe it's art, and I believe it is, or I personally think it's very interesting. We go all the way up to 674, basically, 673.97, whatever. We go to 674, and what do? We have a huge sell-off, $20 in a day. And what do? What level do we stop at? What level do we stop at right here? we stop at the 652 level. And that is why we are looking at it as a key level. How do we go up that much and then the stock coincidentally drops all the way down to a level that we have rejected off of perfectly in the past? That's not a coincidence, guys. I mean, we are simply just looking at what it's done in the past and making an educated decision to help us make better trades. But watch this, it gets cooler. What do we do right here too? What do? We go up all the way to 665. And we go back down right around that 652 level. It's never going to be perfect, of course. It's never going to be right on, the penny of it. But we went down to that same level again. What did we do once we hit that level? We went right back up to 690. Crazy. Okay? Now that we have this, right, we've learned how to identify. What is this called? Support. I mean, we've bounced off of this level about 4 times. 1, basically 2, 3, and 4. This is a key level. If we were to ever hit this level, which we will, more than likely, if we were to ever hit this level again, more than likely we're going to see a bounce towards the upside. Okay? Another thing I'm looking at this all day. Look at that. Okay, this is minor support right here. We got support, okay? What did we do multiple times off of this level? We rejected, we broke through, we broke through again, we broke through. But look, we consolidated on this support level. Consolidation. Break below, hit the key level. This is the key level. Remember, this is the minor support. This is the key level. We shoot up, consolidate on the minor support. It's so cool how this works. We consolidate, meaning we're trading sideways on one little spot, consolidation. We consolidate on the minor support. We have a huge push up all the way to 690. And then what do we do after this? We push all the way down within the next week perfectly. We have a candle close right above, what is this level? 667, the minor support. We have a candle close right on 667 perfectly. A perfect candle close on 667 after we've rejected, after we've consolidated, after we bounced, and then we bounce again. Okay? Now, whenever we have a huge push up, okay? Whenever we have a huge push up and we reject off of that level, in the future, if we have another huge push up, more than likely we're probably, not guaranteed, but you want to watch to see if we're going to reject off of that level again, because if we reject off that level again, you're going to want to get in on call, our puts. You're going to want to get in on puts if it makes sense. Now, there's different variables and when making an A+ setup trade. It's not just the key levels. It's not just, oh, this stock hit support, or oh, this stock rejected off of resistance. No, it's not just that. There's volume included, right? What is volume? Whenever you see this volume right here, this is how much, for example, if it's green, that is how many buyers bought the stock on a frequency of how much they bought it. Right? Does that make sense? Red is how many sellers sold that stock in that time frame. Okay? So, and of course, you're going to see huge buys, you're going to see low buys, you're going to see huge sell-offs, and you're going to see small sell-offs. Okay, so you got to watch these things. So we have volume in play as well on what the buyers and the sellers are doing. They control the market. Okay. Another thing too, not only do we have volume, but we also have the RSI. What is the RSI? The RSI is the relative strength index. The relative strength index is basically whether the stock is overbought or oversold. Okay, and it's basically an index of where it's at based on the time frame. Okay, so for example, as you see, we have two lines right here. We have 70 and we have 30. If it's at 70, if the relative strength index is at 70 or higher, that is considered overbought. That means we have bought that, the buyers have bought that specific stock too much, right? We're overbought. Whenever we're overbought, we're going to start to go down. We're going to start to sell off. Okay, for 30, that means we're oversold. If we're down in the 30 level, I mean, just look what we've done. We bounced off of here, off the 30 level every time we've gone up. Whenever we're looking at all these indicators, I mean, just look at this. I'm gonna show y'all. Okay, so for example, whenever we were at 690, we were perfectly at 70 on the RSI, meaning we were overbought on that stock. Now, if we saw when we were looking to take a trade there, okay, our relative RSI, relative strength index, is at 70. Not only that, we're at 690 on the stock. We've had a huge push up, and then not only that, we have a huge spike in negative volume, right? We have a huge spike in negative volume. We're gonna want to look at this and be okay. Obviously, the stock more than likely is not going to push up after we have so many indicators showing us where it's at and what it looks like, and then just from our personal eyes, when we're looking at the stock, like, yeah, the stock just went up a lot the past couple of days. It's gonna have a sell-off. It's due, okay? So whenever we have the RSI signaling that it's overbought, and then volume showing that we have sellers or buyers stepping in, and then we're trading off of key levels, that's how we take A+ setups, and that's how we take good trades. A lot of people, when they get into this, they trade because they're greedy. They just trade to trade just because they want to trade. They trade off of impulse. They trade off of emotions, and whenever they lose, they then revenge trade and try to win back just by getting in a trade that doesn't even make sense, that isn't even well thought out. People don't trade off of charts. People don't have a plan when they get into trading. People don't have, whenever they get into a trade, people don't have a certain spot where they're going to exit no matter what. A take profit whenever they're up goes to the greedy side. People don't have a stop loss to where whenever they're down at a certain percentage, they tend to hold and hope it goes back up or hope it goes back down, depending if it's puts or calls, and then they end up losing money because the theta on their contracts with options expires, and it over time it starts to eat up the contract price, giving you less value than what it would cost to sell that contract. So you're losing money, and also you have a very low chance of that stock actually going back up in the way that you want it to. The issue is when you go into trading, you need to have a plan. It's very important, right? This is, we're dealing with money here. In the Bible, it talks about not being a fool with your money, but being smart with your money. Okay, and if you just go into trading being a fool with your money and just trading just to trade, and not having well thought out A+ setups with strong indicators showing you, hey, this looks good here. And then having a community also of people saying, hey, I'm looking at the S&P 500 here. I'm looking at the 650 level. It looks like we have support here. We're looking good here. What do you think, Ethan? I'm going to be like, hey, I'm looking at that too. That looks good to me too. Whenever you have community of people looking at the same things that you're looking at and calling out things, and y'all are looking it over together, 4 eyes is better than 2. 8 eyes is better than 2. 16 eyes is better than 2. You're going to have better, well thought out, just better trades overall, right? So that's mainly what I wanted to go over today, was how to identify key levels, but we ended up getting into some indicators and also some candlesticks and some other things. But it was Tropical Trades, and please leave a like, subscribe to the channel if you do want to see more content and educational trading videos like this. Please leave down any questions or comments below so I can review them and answer any questions that anyone may have. But other than that, I hope y'all have a blessed rest of your night.